Good morning, everyone. Good afternoon or good evening as well. This is Joseph Trevisani for Worldwide Markets, and here we are once again discussing Greece, one of my favorite topics, as you know, for all of its ramifications. A few notes before we start, as always. If anyone has any comments, questions, or the proverbially and oft-requested jokes, please type them in. I'll be glad to use them if I can, and I'll be glad to discuss them. You can type them either in Q&A, which I have up, or in the chat. I would like to thank the people at FX Street, Adinda and Vicky and Maud and everyone else, of course, Francesc and his lovely wife, who founded this company and made this all possible. And since they are Europeans, they certainly have a stake in this. Now, today's topic is Greece again. And I think that this time, finally, we are approaching some sort of end game. This has been going on for how many years now? 1, 2, 3, 4, 5 years? A long time. Also, if you have any topics or considerations about the subject that you'd like me to address, again, just please type them in. I like to run this rather than my talking incessantly for 45 minutes as a give and take, as interactive in the word, which is not used much anymore in relation to the web and all of its ramifications. So here we are again with Greece. You must admit it does keep our interest, does it not? And theirs as well. The questions and the considerations, the topics, the ramifications of the Greek situation go to the heart of the European Association, of the European Union, of its attempt, successful so far, more or less, to create a united currency, and if you will, in the longer run, to create a federal states of Europe. Okay. Well, you know, there are all those great jokes which we try not to tell anymore, at least not in public. There's a very old one about Europeans and the difference between heaven and hell. I never remember it in detail, and I certainly can't tell it here, but it's along those lines. It's pretty funny, and the Europeans are quite straightforward about this. And my background, just so you know, is Italian. My grandfather came from Italy about 100 years ago, from southern Italy, so I have a lot of connections with the old world. I've been there many times, and my relatives from the old world I visited here. So it's a very lively connection. We're a little unusual in that we kept up in our family the contacts over 3 generations now with our family in Italy. It's very interesting. I'm taking my girls next summer to see their, at this point, probably 6th or 7th cousins, but we're all quite close. Anyway, the assumption of the markets, even with this morning. Now, let me put up the, and I'm going to start with the euro and then work backwards to the larger implications. Now, we've discussed this several times. And so I'm not going to dwell so much this time upon the macro, or if you will, the cultural and economic and political issues. I'm going to talk about them, of course, but they are not the focus right now. The Greek situation is emblematic of much that the Eurozone hopes to achieve, much that it has failed at, and in my view, it's backward-looking interpretation of history. But then policymakers and military generals often look backwards rather than forward, and the reason is very simple, of course. The view behind is clear. The view ahead is obscure. So this morning, this is the euro. Where is the 5-minute here? Okay, now this drop is today right here. And actually, most of it is 8:30, which tells you that it's not. There's a long fall off here. This is today's trading, so we come down almost a figure, really, not quite. here's where we started out today, and not much different than we dealt on Friday. Or actually, I'm sorry. Today's 26. This is Sunday's trading, which is actually Monday in Asia, of course, and this is Friday. But still, on Friday's difference, there's really very little change in our level. The Greek crisis, again, Redux. Is that French or Greek? French or Latin? I think it's both, actually. This line right here, this sharp drop right here, is not related to the Greeks. It is the 830 number in New York, the durable goods orders, which were considerably better than expected. In addition, you had the Fed officials, primarily Yellen, saying that, it's a good time to raise rates. Okay, it's a good time to raise rates. We shall see. I think they probably will at this point, although I don't think they're going to do it in June. I think they'll probably do it in September. They don't have any good reason for raising it, except that they have kept them too low for far too long, and they are becoming further aware of the risks involved in a stock market bubble, which is what it is. I don't care what anybody says. That's what it is. When you have GDP growing probably negative in the first quarter and maybe 1% in the second quarter, you do not have stock market at record levels in any sensible interpretation of what a stock market's for. But back to Greece. So this run right here today was not connected, so far at any rate, to the standoff in Greece. Now, I wrote a column last week, and I still believe this. I have believed this from the very beginning of this Greek crisis situation a number of years ago. And that is, although it appears on the surface and in almost all analysis that the Germans, the Europeans, the IMF, the people who are lending the money have the upper hand, and that at the end, Greece must kowtow and accept their medicine, if you will, which, by the way, they've been accepting for 5 years already. It has always been my position, and it still is, that Greece has far more power in this situation than is appreciated much in the media. I will not discuss the media's analysis, but the reasons are thus. It's a quote I used several weeks ago in yet another column about Greece. It's from the science fiction novel Dune. Who can destroy a thing can control a thing. Now, if Greece leaves the Eurozone, it does not destroy the Eurozone, but it does destroy the idea of the ever closer union. I don't know that the population of Europe is so enamored of that particular federal idea, and it's a non-organic federal idea. But it is true that the rulers, the elites, the politicians, all the bureaucrats, can I say that with certainty? No, but I'm close, are interested in this idea. Europe's history for the past 115 years is one we all know. There's no reason to go into it. The origin and thought and, if you will, morality behind the European Union, which is where we got started with the Coal and Steel Pact in the early 1950s between Germany and France, remains the dominating ethos on the continent. They don't really see. I will be glad to do that next week or the next one, because I think it's a similar situation. Brexit would be the British leaving. It's not nearly as fraught for the Europeans and their continent if the UK gets up and goes, because by both sides, they have always viewed themselves as a part. Remember, the English Channel is not called the English Channel in France; it's called La Marche, and that is emblematic of the view. So I don't think it would be as much of an difficulty as if Greece does now. But I'll be glad to do that. That might be the topic we'll do next time. I think I have to choose one more for next month. By the way, I apologize for my voice today, but it has been a relatively wet and rainy springtime here, and there's lots of pollen in the air. And apparently, as I get older, I've developed a few allergies, which is something that never, well, I never noticed at any rate when I was younger. Anyway, the Greek problem is still viewed by the markets, and I think this is uniform, although less so, and I'll show you a chart that explains that here. Let me show you a better chart. And this one is, there aren't too many charts like this. Let's see if I can, is this the one? No, that's not the one. Which one? That's not the one. Did I not bring it? Yeah, it's this one. Okay, sorry. When have you ever seen a yellow line like that on a chart? Now that is the euro against on the same display compared to Greek 2 and 10-year bonds. The 10-year is green; it's trading largely continuous, but you can see what happened to the Greek 2-year. It simply stopped trading. That's why you have this bizarre, perfectly sloped line. Looks like it's almost 45 degrees between those two. Back in early 2012, 3 years almost, in the 2-year, because it didn't trade. There wasn't any 2-year. And the Greeks, I think, have, and I'm not sure exactly why that is. I'll have to investigate that, because the 2 years existed, but they may have issued a new, or it may simply be secondary market. I'm not 100% sure, to tell you the truth, on that one. I was puzzled about this when I pulled it up to myself this morning. Yes, let me answer that in a question after I go through this. So some of the markets are viewing this. Now, if you take the extremes in this chart right here, you can see that the degree of concern now for a Greek exit from the euro, or for anything else associated with the Greek debt problem and the Europeans, is far, far less. We peaked out here at about 13% in the 10-year. The 2-year hasn't done very much at all. My guess is there's zero trading in it. It's around 25%. Again, we're looking at different scales here. And then the euro has gone down. But, a lot of this from last summer, most of that rundown in the euro from last summer, as we know, has less to do with Greece and much more to do with the opposite directions of the two main central banks involved. The ECB, which has finally started its quantitative, we need a new name, quantitative easing. It's clumsy. It's not particular. I'm trying to think of one. Quantitative inflating, maybe? Quantitative ballooning? Maybe just call it ballooning. Anyway, the directions in the two central banks, with the Fed trying desperately to get up its nerve to raise the Fed funds rate a quarter point. I mean, this is what we're talking about. It is the absurdity of the situation relating to normal economics, normal finance, normalization of history, if you'd like. If you step back and think about it, we've been focused on whether or not the Fed's going to raise rates for so long. What are we talking about? We're talking about a central bank that is terrified, clearly, of raising rates a quarter point, from 0.25 to 0.5. Well, what are they afraid of? Kind of answers itself. They're afraid they're going to collapse some of the bubbles out there that they've created. Do about it. One of the things we all must remember about central bankers, smart as they may be, their background are rarely, if ever, markets. Their approach to economics is through mathematics. Mathematics does many wonderful things, but it does not explain adequately the behavior of markets. Because markets are, of course, at base psychological. They are the balance, hope, greed, and fear. We all know this. And that response is one that is very difficult for the academics and the bankers to chart. For us, it seems quite sensible. But let me read you a few quotes this morning that I picked up in my review of what was going on in the world on Tuesday morning. We had a holiday here. Yesterday was Memorial Day. Where are my quotes from some of the figure? I know it's a different article. Hold on. Sorry. So we have the Europeans in the morning talking about what will happen if the what will not happen if the Greeks will fall. Timothy Geithner, former Secretary of the Treasury during about most of the financial crisis, not all of it, but most of it, is also not a markets man. He's from the Fed. And the reason I say they're not markets man, although certainly the New York Fed has enormous amounts to do with the markets and its traders are involved in the markets, you're only really involved in the markets when your P&L is at stake, when you're trading for your own book. And the reason is not because that gives you any great wisdom, but it does give you insight to the state of mind of the mass market, the mass mind that is the market out there. That's why I've always thought that you should have on that FOMC and on that the trading desk in New York, which goes into and out of the bond market, and all of the market-based and interventionist and functions of the American Central Bank, you need a couple of old-time, long-term bond traders for whom the psychology and the fears and hopes of the markets are not alien, part of themselves. But at any rate, you generally don't. You make a lot more money trade if you're good at it. You make a lot more money trading bonds, commodities, whatever it is, currencies, than you do working for the Fed. And therefore, that's not usually something that happens. But it does happen on occasion. Okay, so while we have, and I bring up Timothy Geithner, who in my mind was not a great Treasury Secretary by any means. Nonetheless, and we were talking only about Shearson, Lehman Brothers, which used to be Shearson Lehman. And he said, in his wisdom, had we known what happened, we wouldn't have let them go bankrupt. Okay. That's a bank. It's the fourth largest U.S. investment bank. Greece is actually a country. Maybe some of these bankers haven't noticed that. And I do not believe. Now, we have this morning, because they're at an impasse yet again, Yanis Varoufakis, the Greek finance minister, whom you can tell whose sartorial outlook is one I approve of. If you've ever seen a picture of me, you'll know that we have the same hairstyle. Anyway, he is blaming creditors. That would be everybody else who's lent Greece money for insistence on additional austerity to get the money that is being embargoed, the $7.2 billion, the last bit. This is arguing over peanuts. Yes, Greece will not be able to make. I have a chart. Let me show you the Greek debt that's due. I'll just put it up briefly. This is what's due lately. Greece has no money to pay any of this stuff, any of it. Okay, we go back. They paid these. This is due next, June. Okay, they have no money. So even if they get the $7.2 billion, it goes on and on and on. The point of the Greeks is, and it is an accurate point, you cannot achieve anything by running a Ponzi scheme, and that is what they are doing. They are simply lending Greece money, and you know what Greece is doing? It is turning around and sending it right back to the IMF, to European countries, to people who hold these bonds. There is no point to this except to keep the European project, as far as this goes, on track without any defaulted countries. Greece is broke. Nothing is going to change here. Greece cannot pay back this money, and this is a point without question. Not only can't it pay back the money, the United States can't pay back or won't pay back its $18 trillion in debt either, but it can service the debt. Because if nothing else happens, we can just print money and inflate it away. Does anyone ever wonder? Oh, I'm not going to go on that one. Greece can't do that. Greece can't print euros. So the idea that Greece can either service adequately this debt without destroying their economy, and the more they take out of the economy, less is of an economy there is. In addition, Greece has a history of resistance to central authority. You can put this on history. I'm not going to go there with the Ottomans and their occupation for several hundred years. But nonetheless, they have a resistance to authority, to paying taxes, to all sorts of things. This particular situation is only going to has exacerbated that tendency. Now, I saw a recent study from the FT that I put in my column last week that Greek tax receipts have actually improved from where they were at the beginning of the year. We'll have to see if that continues. It's possible. I don't know the source of that. It may very well be that the current administration has tightened up enforcement, and they're having some effect with it at this point. And it is also true that this government is given a chance. Excuse me. The Greeks elected the most anti-austerity, if you will, anti-European government they could. So the Greeks are clearly not happy. And there may be some association and feeling towards this particular government because it is actually trying far more than the previous governments, the conservatives and the socialists, to fight for what they were elected for. So we have the head of the French central bank. Let's take one step back. So Mr. Geithner said, had we known what we know now, it's up there with the Kinks. Had I known now what I know when I was younger, had I known what I was stronger, whatever. But it is a standard human trope about the acquisition of knowledge and the slipping away of youth. Nonetheless, what happened after the bankruptcy of Lehman was markets completely and utterly panicked. Now, a lot of those securities, the asset backs based on mortgages, were marked to market. And if there's no market, there's no marking. So many of those had to be marked down to zero, and this was sort of ballooned into the capital requirements on the banks holding them and what they needed, why they needed all that money. Many of them did. I am simply hugely dubious of what Mr. Neuer now said. And I'll read you, this is a quote from Bloomberg article. While Bank of France Governor Christian Neuer said he doesn't see, quote, any particular risk for banks and insurers related to a departure of Greece from the Eurozone. Well, I hope he's right, but I don't believe it. The idea that this will not have ramifications, what he's thinking of is specific holdings by banks and national governments of Greek bonds and what they've written against it. And he may be right about that. I'm assuming he is because he's seen the figures, done the analysis. I'll take those comments. I'll answer some of the chat in a second. I'm assuming he's right about that he's done his homework. But that is hardly the totality of the situation. How will markets respond to this? We're not talking about the capital requirements that they've set aside at French banks that are holding lots of Greek debt. How will the risk parameters applied to other countries change? How will the opposition parties, which are thriving in Spain, in Portugal, in Italy, in France, Ireland, I'm not sure about. How will they respond to this? So the issue is not one solely for bankers of capital requirements against suddenly worthless debt. It is the entire panorama of political, financial, and if you will, economic questions and electoral questions connected to this. In addition, the only view that has ever been possible of the European Union has been the ever closer union. It is clear as, I don't know, whatever cliche you want, the nose on my face, that the euro as a political entity, meaning as a financial tool for increasing the prosperity of those under it, doesn't work the same for everyone. All right, let me take this question for a second. There are two questions here, and I don't want to just delay on them totally. So let's take a look at these. I've heard one commenter say the euro is cheap right now. Well, historically, I mean, if you go back for, let's see if I think I have a, do I have a longer term chart for the euro here? I mean, this is a 5-year chart of the euro right here. This goes back to 2010. You could make an easy case, and this is all you have to do, that we're well below the average of where the euro has been in the past 5 years. And so in that case, that's just a statement of fact. It doesn't really tell you whether or not it's going to be cheap in the future or what anybody's view on the future is. Just if you take the average from 2010 to right now, we're way below it. The average is somewhere around 1.2. We're at 109. Okay, this one. Yes, I think. Oh, is that what it was? Okay, I didn't actually see that. It makes perfect sense because they're not pursuing any Greek. I mean, I have lots of friends in Athens, and it is. So I'm not so close to them right now, but I used to travel back to Athens, back and forth a lot. And I would stay with friends of mine. I would have dinner. I mean, I spent a lot of time in Athens in 2010 and 2011, into 2012 actually. And now things have gotten worse since then, I'm sure. But the life of Greece has gone on remarkably well. One thing you must remember, and I wrote this is in my column as well. I hate to tout it, but a lot of this stuff is there. The Greek underground economy, the Greek black market, the Greek self-employed figures are much, much higher than anywhere else in the Eurozone. So the answer, the response of the Greeks to this situation has simply been to withdraw from the official economy. They don't report. They don't pay taxes to whatever degree. They keep in cash rather than other items. And this is a perfectly normal, sensible, logical response to what's going on. So although it would appear from the shrinkage in the Greek economy, I think since this started, we're talking 25%. That's in the official statistics. I will bet, although I can't prove it, I don't think anybody else can either, that if you count in the beginning the black market and now in the black market, that the shrinkage of the economy is much less. What you have seen and what you are seeing is a transference, is a transfer of economic activity from that recorded by the state in its official GDP figures to the underground economy, which is one reason why Greece has managed. People adapt. People manage. There's another point to this, which is I do not here speak from a Greek point of view. I'm trying just to be objective, that many of the coping mechanisms, if you will, the transfer of, and again, I can't prove this. It's just my suspicion, my assumption. My objective analysis tells me it's true, but I can't prove it. It's very difficult to do a charting and an analysis of an underground economy, of stuff that's not on the official lists of things. But those adaptations that have been absolutely necessary for Greek families, for anyone living in Greece who doesn't have sources of external income from outside the country, are exactly the type of adaptations that will be necessary should Greece leave the euro. So we shall see. Okay, so Mr. Neuer of the French Central Bank says that there's nothing to worry about. Okay, he may be right. I doubt it, but he may be right. The one of my favorite examples, I've never used it before, of central bank, how shall we put this, inability to grasp reality, was Mr. Jean-Claude Trichet in the summer of 2008 when he said, we have no problems from the American subprime crisis, and they raised rates. And 2 weeks, 25 basis points. And 2 weeks later, they turned around and said, our growth is not going to be as strong as we thought. And that's all it took. And this is what I mean when I say the bankers and the central bankers don't really understand markets. Because that one statement is the best example I can think of. That one statement from Jean-Claude Trichet in the summer of 2008, mid-July, was après moi le déluge. After that statement, everybody changed their minds. Maybe not instantaneously, but very quickly, about the entire situation. And after that statement, the market's assumptions crumbled. And the euro went headlong down a ski slope. So this is the kind of thing I think that bankers have problems understanding. I hope so too. I really do. And I am not speaking or I'm not minimizing what's going on in Greece from a human, from a family, from a life point of view. I haven't been to Greece in 2 years now, so I've not judged. But certainly there were vast changes taking place at the time. At any rate, so the status that we are now, and it is in the market assumptions again. You are getting, as I said earlier, this view, this collapse of this devaluation of the euro is one long and heartily sought by the Europeans, by the central bank, by Mario Draghi, for its effect on European exports and European economies. Remember, the central bankers, the United States, and we talk so much about the central bankers because we don't have any choice. Their actions since the financial crisis, and in a very real sense, their actions were demanded by everybody. When 2008 blew up in the fall, everybody looked to the Fed to do something. And the Fed did something, and so did the government. So it is not that the central bankers are acting in ways beyond either their responsibilities or beyond their intent, if not means. They're doing what many people want them to do. Nonetheless, their view of what is happening is limited. This view, this fall right here, as I said earlier, is not related, in my mind, to the potential for Greek exit. It's related to the European Central Bank quantitative easing reality and the U.S. brave quarter point pending rate hike. That's what's caused the euro to fall from 2014. Now, that tells you that the assumptions behind the Greek impasse haven't changed. The assumptions remain that these are negotiating positions. I think in order for Greece to have any leverage, it must threaten Armageddon, leaving, and it must be believed. Otherwise, Greece has zero leverage. The only leverage, the only threat Greece has is to threaten the integrity, the uniformity, the forward view, of the ever tighter union. Now, this is a game of chicken. And it appears that nobody's chickening just yet. But the markets are telling you, even the credit markets, the most sober of all the markets, is telling you that this is going to be solved. But of course, whatever solution they come to, assuming they do come to one, will not in fact be a solution. It will simply be a delay. What was it that Marshal Foch, I think, said after the Versailles Treaty was signed? This is not a peace treaty. It's an armistice for 20 years. He was almost exactly right. And that's the same situation we have here. There's nothing about this situation that is going to be solved. Greece cannot pay these debts. It cannot service these debts. Mr. Tsipras and Mr. Varoufakis' points are correct. Without debt reduction, they should probably just default on the whole thing, meaning they shouldn't pay it. Greece can never regain control of its economy, and it can never actually have a decent economy. In my view, for Greece, in my view, now, from a long-term financial and economic point of view, Greece does not belong within the euro. The euro is not serving the people of Greece. It's, in fact, oppressing the people of Greece. Now, the people who lent the money have a different point of view. That's fine. This is my analysis. And so for the long-term economic well-being of Greece, it's always been my view that their best solution would be to leave the euro. Now, I say that not as advice, but simply as in a form of analysis for the economy and the finances. The opinion of the Greeks, as taken in many polls, is that they want to remain part of the euro. My idea on that is that wonder, are they really differentiating between the euro and Europeans? The Greeks will always be Europeans, period. That's the end of it. But will they always and should they be part of the euro? Now, that is one of the key points why the Greeks, if they are willing, and Mr. Varoufakis seems to be someone who is willing. I don't know about Mr. Tsipras. I don't know him, but Mr. Varoufakis, of course, has been the public face of these negotiations, and still is clearly, despite the fact that he was supposedly demoted. I don't think he is. What does this represent if the Greeks leave for everybody else? Because largely the euro has not served a good third or more, half, if you will, by population and economic size, perhaps not by political size, of Europe. It doesn't work as well as the prior system for the economies. It works well for some things, but for actual growth, look at the records of economic growth in Italy, in Greece, even in Spain, where they had that huge housing bubble, since the euro has been created compared to before. Now, there are other factors involved, of course, but in a democracy, you need the permission of the people long term. You can't you get away with a little while being able to, a little while, half a generation, with policies that are not beneficial to the majority of the people. But you can't do it forever. And this is the key to where the euro is headed. And Greece is simply leading the way. For whatever reason, because historically Greece has been or was at once, the leader really in Western civilization. Yes, I'll deal with that in a second. That's a fascinating question. I'll deal with it. I'll tell you what I think anyway. Everybody believes in fantasy, but I read to my kids every night. Anyway, if the euro, and the Greeks are simply making this more obvious than anyone else, if the euro cannot be made to be a benefit to not just the Germans and the Finns and maybe the French and anybody else you'd like to put, if it cannot be made to be beneficial to all, then it has no future, and it shouldn't have a future. This is the first crisis the euro has faced, and it's not doing very well as to how to handle it. So this idea is what's behind the positions of the Greek government. Okay, let me just look at these two questions. Not only did they know back in 2012, they knew when Greece joined the euro. The idea that the European chanceries and the finance ministers and all these really smart people didn't know that Greece was fudging its books when they joined the euro simply does not stand to logic. And I don't believe it's true. Although there is, of course, that great example of Jean-Claude Trichet, as I just mentioned. Did he not know that this would be a huge problem for the European banks in 2008? Is that possible? I don't really know. I find it incomprehensible that would be the case. And I take the same approach here. The politicians and their accountants knew that Greece was fudging its books when they joined. But the political movement, momentum to the ever tighter union was driving the decisions. Because the decisions are at heart and in essence political. And that's still the situation. And this is the greatest threat of Greece. That idea that has driven European politics for 70 years now, since the end of the Second World War. 70 years. In the long run, ideas are some of the most powerful things in political and human life. And this idea excuse me, sorry about that. This idea of the ever tighter union run by eventually, all-powerful bureaucrats out of Brussels will be dealt, I think, an irrevocable blow because, one, the logic is not behind it. Now, not only is the logic not behind it, facts are not behind it. They're right in front of us. The empirical knowledge is right in front of us, empirical evidence. We're doing our best, not us, but other people in Europe are doing their best to ignore it. There is, I think, a great deal of acceptance of this idea that that this idea is not going to work the way it's been set up in Germany. It appears anyway. And if that's true, if the Germans believe it's not going to work and the Greeks believe it's not going to work, then the question becomes, why do it? Are the Germans willing to let the Greeks go, and are the Greeks willing to go? Again, the markets are saying, including the credit markets and the currency markets and the equity markets, they're saying, I'll answer that question in a second. They're saying this is still brinksmanship. It's really not going to happen. The Germans are not going to force them out. The Greeks are not going to go. That's what the markets are still saying. And they're going to say this right up until the very end. Whether or not it actually happens or not, I don't know. And the end is going to be, as we have with this chart right here. Where's my chart? Right here. This chart right here is the June payment. They've made these payments. This is the June payment. $5 billion? I'm not exactly sure. It's saying here a little bit less. I thought it was $5 billion. But anyway, it's June 5th. But no, there is no such thing in any of this as a hard deadline. There hasn't been any so far, and there isn't going to be any. Unless a decision has been made on either side to take this out, to either force the Greeks out or for the Greeks to leave. Other than that, there are no decisions. You can always come up with a formula to kick it further, to call it something else. They've been doing this already. Okay, let me look at these questions here. I just want to ask Adinda, are we running 45 minutes today, or can I run over? It's already 48, so just type it in for me, would you? Good question. The Greek bonds at that point become open for negotiation. You can look at various bankruptcies. Argentina's done this a couple of times. The Russians did. Mostly gets written off. There may be, in order for Greece to be permitted to even issue bonds again, you can get, okay, I will finish, run 5 more minutes, and I'll answer some of these questions. We've covered most of the stuff I wanted to cover today, so that's good. Most of the bonds default. I'd have to look into the history of some of this stuff. So look, a European or a country defaulting, if you look at it historically, hardly even interesting. It happens quite often. It's happened in the modern world. Argentina, Russia. So that becomes less of an issue, I think. I believe Mr. Neuer when he says it's not going to be any problem for the banks, because I think one thing that has happened is anybody holding these bonds right now, and they're largely, I think, state-affiliated organizations, central banks, the ECB, perhaps state-owned banks, maybe BNP Paribas, I'm not sure. The privately owned bonds were all written down at the last bailout. And so that becomes the issue for those banks and for the ECB. Now, has the ECB set aside reserves against the Greek bonds it's holding? No, at least I doubt it. They don't work that way. And it's true that the unelected politicians, the bureaucrats, are the ones who are running this particular show, but not entirely. Because in Greece, and perhaps soon in Spain, there's an election, I believe, next year in Spain, and I think the party is called Podemos, which is a relatively new party. Its opinions, its public positions are quite similar to Caesaria's. So, and if Greece leaves, or if Greece gets a good deal by threatening to leave, then what do you think other political parties? Politics is response. A lot of it is opportunism. You hear or sense a change in the electorate, and you capitalize on it. Occasionally, very occasionally, it is politicians who do the leading, but that's rare. And it's usually only in a crisis. We're not in a crisis right now. They follow the lead. They give voice to changing opinions in the electorate. That's certainly what happened in Greece, and it's what's threatening to happen in other parts of Europe. So this threat, again, is one which the Greeks, Alexis Tsipras and Yanis Varoufakis, are, in my mind, effectively using. They have not given up on their central purpose, which is to make effective in European politics the wishes of the people who elected them as best they can. I cannot and will not predict whether Greece is going to leave the euro. We've been dealing with this crisis for 5 years now, and there have been many predictions, and they've all turned out basically to be wrong, except the ones that say Greece will never leave the euro. But I don't think that's true right now either. Greece may be planning to go. The Germans may be planning to let them go. Certainly the rhetoric on the German side leads more towards that than before, but nobody's believing them. They're all looking at this chart and saying, nah, we're not worried. If that changes, these are the last predictions I'll make on this, and then we have to wrap up. If that changes, and it will be the kind of thing, I think, that changes very rapidly, much as in the summer of 2008, then the euro will head straight to parity, and it'll probably get there. If Greece leaves, then we will eventually, I think, be looking at, in a short space of time, the lows in the euro from its original, inception would have to be original, since its inception back in 1999, which is, I believe, down around 83. So there we go. I have to end now. I once again thank all of you. This Greek saga. Remember, the Trojan War went on for 10 years. We're only half that right now. So maybe we have another 5 years to go. Is not finished. And its profound implications for the future of Europe should not be underestimated. Because even if they come to some solution now, there is no permanent solution to this Greek debt problem except writing off this debt. And that is the solution that they are trying, at least the other side is, the Troika and the rest of them are trying desperately to avoid. But in fact, there is no other solution. Okay, thank you all very much. I appreciate your attendance. I take it as a great compliment that you will take time out of your day to listen to me. I will type in my email address. If anyone has any questions, comments, or jokes, please send them to me, and I will be glad to answer. Again, thank you all very much for attending, and everyone have a good day.